All right. So this is the first episode of Gen Z Investing Insights. Name might change, but for now, so it is. We have Alex and Pierce and me, and we're going to be talking about a bunch of different things concerning the economy and investing. So the first thing we're going to talk about is bank earnings. It came out on Friday. We had JPM, Citi, and Wells Fargo. What do you guys think about that?
I was not surprised, I'll say that, because there was going to be a lot of movement from small regional banks into the bigger like everything banks as we call them. So JPM, of course, we didn't know to what extent it would be, and of course it's to a pretty great extent. So we saw regional banks as well follow like the opposite of that pattern. So we saw regional banks not performing too well last Friday. We saw the bigger banks, particularly JPM and Citi, really shoot up after those earnings.
Yeah, I think that's something we can look for, like stock wise, is I think a lot of small regional banks won't do that good earnings, like First Republic, Fifth Third, Huntington, PacWest. I think for stock wise, I feel like a short on those would be honestly like a pretty good move.
Yeah, you have to be a little careful, I would say, though, because Western Alliance, we're going to see them report next week, but they've already been beaten down, 70, 80, 90%. So if we see
Yeah,
any positive news in those earnings, we could particularly see a shoot up. But if we do confirm what was happening with the rotation of funds from bigger banks or from smaller banks into bigger banks, well, then we definitely will see those regional banks performed quite badly. It'll be interesting watching WAL, a Western Alliance, next week. First Republic reports, I believe, April 24th. So that's 2 weeks from now. So Western Alliance will probably indicate similar performance to First Republic.
Yeah, I mean, if you look at FRC and Charles Schwab stock, like it's just they're not going up. The market isn't confident that they're going to be doing well in the future, and until people just feel safe about the whole banking market right now, which probably isn't going to happen until June, most of the stocks are going to recover. I don't think that it's a great idea to invest into Schwab or FRC, any of the regional banks.
Yeah, I agree. I think stay away till we see this set of earnings in particular. It'll be very
yeah,
important.
it's be pretty volatile.
We'll probably see, I would guess. I haven't really looked at the options market, what it's pricing in, but I'm assuming it's pricing in a pretty significant move either way. So these earnings will probably impact the stock, particularly First Republic and maybe even Western Alliance by like matter of like 10 to like 50 anywhere plus percent. Um, so we'll see a pretty big move either to the upside or the downside based upon earnings. And
I just checked. There's a huge volatility being priced in. The IV is crazy on these options for First Republic.
yeah, that's not too surprising. So thank you there for confirming. But yeah, it's definitely gonna be a very volatile time. So it's probably a better situation right now if you're looking to trade those stocks rather than invest. It's probably the right decision to do that, or just stay away from them completely.
Yeah, so going on to the next topic, did you guys see all the AI stuff that's going on with Amazon? Amazon made Bedrock and Elon starting a new thing. He uses the whole X thing that he's trying to do, where he's trying to integrate trading into Twitter, but then he's also doing AI now. What do you guys think about the whole AI thing?
Oh, Pierce, do you want to go first or?
Oh yeah, I can start it off. So earlier last year, I was looking at a company, pretty big company out here, C3 AI, and I just thought it was really interesting, like what their technology does, and kind of how they use it to kind of utilize where the best like oil place to drill is, and kind of using AI in that manner. But there's so many applications to AI, and I feel like we're just on the tip of what is or what is going to be probably one of the biggest like revolutions I would even say of all time, where we see AI replacing a lot of human people's like human interaction. We'll see AI basically take over, I feel like, and we're just at the tip of the iceberg.
Yeah, adding on to that, I think both Amazon and Elon, I think they're both on the right track for the future. I think that for them to survive long term, they had to integrate AI. So seeing them do that now is something that investment wise, I think tech and it might be a little overpriced still, but I do like long term Amazon doing that. And Elon, honestly, I have no idea what he's even thinking. However, I do think this is going to be interesting and possibly, no, not possibly. It's definitely an Elon Musk thing to do.
I have a question to y'all about Google. What do you guys think about like, is Google going to be impacted by AI? I mean, the biggest AI that we're seeing right now is ChatGPT. Is like many of us have used it. Will Google? How will Google kind of handle what that will be able to?
So Google's had a significant lead over AI for the longest time since they have built their Google search based on AI models. So it was surprising to see that OpenAI just fucking kicked their ass with their language model. And now Microsoft investing into that. I don't think Microsoft would buy out OpenAI like outright, but I just think that Google and Microsoft are going to be the two like main competitors going into the future with AI. And I'd love to see Google try and monetize their AI platform a little more. I think they have Bard or something that's not doing as well as OpenAI, but I think that they have had the head start with AI and they will do better in the future.
I think another interesting thing is Elon Musk was a co-founder of OpenAI. Way back in around 2018, he left. He sold his stake in like 2021 or something like that. And Elon did say like he did not like Microsoft purchasing OpenAI or purchasing that huge like I don't even remember if it was 10 billion. It was something around that range, that ballpark range, 10 billion. And so Elon Musk was really disappointed because he doesn't think that this technology should be monetized and should be able to be monetized because like the search engine, we're getting all of our information from this. And I mean, Google now, if you look up something on Google, how they make money is they're going to recommend some company's going to pay for them to show up first, and they're going to recommend like that company first. So even if you look up a certain company, you could get another company first. And then if you click on that, then Google they make a pretty large revenue share from that. So I think it's interesting kind of like where everything's headed and the monetization aspect of AI as well.
I think investment wise, I think a good question is, would you rather invest into Google or Microsoft? If you can group Microsoft being OpenAI and Google being their own thing.
I think in investing wise, that's tricky because if they don't monetize OpenAI, what are you really investing into? Like why would people want a stake in OpenAI if it's never monetized? Right. I think I agree with what Pierce is saying that like and why Elon Musk left. I don't think that you should be able like what Google does with their whole you can pay them to show up first. I really dislike that. I feel like it kind of takes away. And I feel like that's why OpenAI will have an advantage over Google. However, investment wise, I'm not sure I would want to invest in OpenAI because I feel like if they do the same thing as Google, it's kind of just they're one and the same. So I don't think I'd invest in either, to be honest. I feel like Google will go down, and for OpenAI, I don't see a point.
Yeah. I mean, right now, even if you look at it, Google does have a pretty significant market share. Like, I mean, if your OpenAI is probably a small fraction, maybe 1% or something around that compared to the overall searches on Google. And I mean, to get to OpenAI, most people look it up in Google OpenAI to get to it. So, I mean, Google still has a pretty large like market share. And I feel like they have it pretty like uh they have it pretty closely like handled, and they're not gonna leave with that market share anytime soon. And I mean, both companies, Microsoft and Google. Microsoft is probably a little bit more diversified, but Google, we forget about that huge aspect of YouTube. They own YouTube, so that's a. I mean, Google's made such great investments in the past. I forget what they bought Google for, but I remember or YouTube, sorry, what they bought YouTube for, but YouTube right now is worth an estimated like 200 to 400 billion dollars. So that is pretty ridiculous if you think about it from where they purchased it to now. It's like at least a 10x returns. So Google has historically made a lot of good investments. Microsoft has also historically made a lot of good investments. So it'll be interesting to see which one kind of like beats each other out, even if one of them does beat each other out. But I'm in agreement here. I don't think either of them is really yelling my name right now.
I think it is super early, and I think for monetization purposes for language models like OpenAI, it's going to be a lot of business to business deals where OpenAI is going to be utilized to do a lot of the remedial tasks like helping analysts with different things or doing HR, a bunch of simple tasks, which is going to make OpenAI a lot of money. If everybody's using OpenAI to do those simple tasks, then they're going to make a lot of revenue from that. So if Microsoft buys OpenAI or just has that share in them, I think Microsoft would be a good investment to start with right now.
Yeah, I think Microsoft also invested a pretty significant amount early as well. So compared to their original investment, they made already a pretty significant return. I think they invested $1 billion early on. So this was like an additional stake. So they own like they're really invested in AI. And I mean, I think those two companies will be the most interesting two companies to watch in the AI movement for sure.
And there's another thing I want to talk about, which was venture capital. I read an article, I don't know if it was Reuters or something else, but venture capital, the investments have been down. Why do you guys think that is? Why do you think VCs are investing less?
To be honest, I think VCs are investing a lot less into because they go private market. Private market is really inflated right now with the high like interest rates. It's not really an ideal market. And also I think it's important to realize as a VC, you have control. Like these small people, like these small companies, they have to go to you for money at some point. So what's the point in investing if you feel like it's inflated and the rates aren't favorable? They can just wait. So I think that's the biggest reason that the VCs don't want to go in. It's just inflated market and the rates aren't ideal and they can wait. There's no rush.
Yeah, I 100% agree with everything that Alex just said. To add on to that, we saw the SPAC craze, and this is a thing that I followed very closely over the past like few years. I've been really invested in a bunch of SPACs. I think there's a lot of good technology that comes out of these SPACs, but at the same time, we saw probably maybe hundreds and hundreds of SPACs, maybe even in the thousands, go public, and the performance on those companies they're all most of them I would say maybe 99%, 98% are below their NAV price of 10. So the SPACs go public at the price of 10, usually, or that's the price they merge out with their other acquisition company, and they're all like basically below 10. Most of them are even in the pennies right now. So I think it's interesting how the market definitely shift based on interest rates. We saw that. There's a lot of money is drying up because the retail investor is really not that interested in like huge growth in earnings and but lack of earnings per share or her revenue per share as whatever. But I think it's interesting how that money is all basically dried up because I think the SPAC craze is a large part of that, and I think interest rates are another part of it. I think it's a bunch of reasons behind kind of this entire movement away from these more innovative like less like profitable companies into profitable, consistent growth companies.
Yeah, I think you guys all have good points. Another question I'd ask is what would it take for VC deal flow to increase?
I honestly think just a lower valuation in the companies. I think companies are there like the private market is just overvalued. It's just not ideal. So I think even with the rates, if they drop down like the valuations, they're willing to go for less. I think that there will be a lot more movement in the private VC market. Yeah.
Yeah, I think we're at a really crucial point where we see a lot of these smaller companies, the ones that weren't make maybe the best companies, but were good in like ideas per se, like flying, a bunch of flying car companies and stuff like that. Maybe we'll probably see a lot of those companies, the ones that are successful, make it through this time, and the ones that probably shouldn't be here altogether go bankrupt or go under. So we'll see kind of who makes it out And I think it's a really good idea to wait till valuations even become more fair in order to start to invest money in these really volatile, really risky companies.
Yeah, I agree with that. I don't have anything to add. I was thinking of something and then I forgot it. But going into the next couple of weeks, even the quarter, what are you guys' stock picks? What stocks do you guys like?
Uh, Pierce, do you want to go first?
Yeah. Sorry, you go first.
Oh, me? Well, so stock wise, I'm a bit unsure of the market. I think next week, I I I think next week we might see a little bit of red. Uh, I think also once again with regional banks, I do not see a green market coming in that sector at least. I see no green there. So if the options weren't so expensive, honestly, I'd be buying puts on regional banks. Kind of risky, a lot of implied volatility, but I don't see green in the foreseeable future.
Yeah. I don't think I'm not really gonna look at stocks for the next couple of weeks. I'm waiting for I think it's really important we wait till like earnings period ends in order to really see where the market's at. I mean, we saw these bigger banks beat, but I feel like there's a lot of other smaller trends probably in the market that we're kind of generally unaware of, or at least we can kind of assume. So I think it's really, really hard to kind of pinpoint like when to invest in terms of like we don't really know what's happening like with earnings for all these companies, especially regional banks. Regional banks are probably the biggest question mark right now in the market. It's really make or break right now for First Republic, Western Alliance, all those all those smaller regional banks, and I think it's going to be it could be end up pretty badly for them, or if they somehow make it through this, if there's any side of like a site in the future, if there's any side of a site in the future, it sounds a little fun to say, but if there's any site of something positive happening in the future, then I think we see regional banks recover. But if there's any doubt upon whether they'll make it through, we'll probably see another 50% halving. So it's really interesting, kind of those two things. I think it's a good idea to kind of wait it out till it happens.
Yeah, I think I'm also pretty bearish towards the market for the next couple of weeks. I was pretty surprised with all the earnings calls on Fridays for the banks, and I think it's a good sign for regional banks. If even though it's bigger banks, if banks as a whole are doing well, I think the regional banks are going to be doing as good as well too. Um, as for any specific stocks on my Substack, I talked about Electronic Arts. I really like EA's company. I think their whole microtransactions business is doing really well. They have a game coming out in 2 weeks, and if that game does really well, I think that their stock is already gonna fucking do amazing. When I wrote the Substack, it was at 109, and now it's at 130, I think. So that's a big buy from Jacob. Um, but I do not have any other questions if you guys want to talk about anything else.
I think we're getting to a point where there's some SPACs. I mean, it's been like around a year and a half now. We wait a little bit longer, but we are seeing some very significant deals on some very like good companies long term. So if you're looking to speculate on some like companies, particularly SPACs, there's definitely some that are trading at 10, like 1/10 of what it was, maybe less than that, 90% down of what it was if you're looking at a year and a half ago. And a lot of these companies haven't changed their fundamental wise, but they have changed in terms of the market sentiment towards them. So if you were investing for the fundamentals of the companies a year and a half ago, I think if you're looking to maybe purchase some SPACs that are de-SPACed at a lower price, now is probably not a bad time to start kind of loading it into those like smaller, more volatile companies.
You know any tickers you're looking at in specific?
Uh, there's some that I've always looked at Proterra. I've always been very bullish on Proterra, PTRA. I think their battery business is very, very like it could be very profitable in the future. But the problem right now is, of course, their busing business, which is a large majority of their business, lacks the necessary profitability to really make the business sustainable. So if they're able to transition to the battery business rather than consistently being on buses, I think you'll see a pretty substantial gain. But it's a matter of how quickly they can do that, because right now they are at risk of going bankrupt, of course. So you have that risk in exchange for a very, very significant reward, I think, in the future. They have a lot of partnerships set up with like some other SPACs. A lot of these SPACs that went public didn't really have a net like the battery that was necessary to really have a sustainable business. They kind of had just an idea, no battery behind it. And in an electric vehicle, the most important thing to have is, of course, the battery. And Proterra does have like really good batteries that are really able to be adjusted in a way to fit in a lot of vehicles. So I think their partnerships are really interesting, and they just have to leverage those rather than continuing the electric buses, unless they can find a way to make that more profitable in order to be successful.
I just had like a totally random thought come to my mind. What do you guys think the US dollar with China, India, Russia kind of moving away from it? Do you guys think that we will see, impacts of that?
Chris, you want to go first?
You can go first.
So I really, as I've said before, I really don't think that's going to have that much of an impact. I think the US is going to be fine. If it really does affect us economically, we'll go to war with China because we're America. But
Some oil.
get some oil.
Yeah, of course.
But I really don't see the dollar being affected that much by foreign competitors.
Yeah, I mean, we saw Warren Buffett last week, sell a significant portion of his stake in Taiwan Semiconductor, and so Taiwan is, of course, like that is an area of significant conflict if China decides to try to take over Taiwan. And the U.S. previously said they would take out all the fabs basically if China was to take over Taiwan. So U.S. would basically destroy them, just bomb them, or do whatever they need to do. They have a strategy in order to take over the fabs, but I think Warren Buffett selling Taiwan Semiconductor might be a further indication of things starting to maybe escalate a little bit more in Taiwan. We knew about this problem before, but I think it's probably going to get worse rather than better. That's all I can kind of say right now on that. I'm not too informed in terms of the dollar, but
yeah. I mean, honestly, neither am I. That's why I was wondering if you guys had any thoughts. I just know the US loves to, we have a lot of perks with being the reserve currency of the world. And if they move away from the dollar, I just fear, like, for instance, our sanctions won't be as, impactful on different countries. Like the big thing with Russia is when we sanction them, and like that's like why Russia is like done with the dollar. They're done with us sanctioning them, taking away their money. But who knows?
yeah,
And Russia and Taiwan definitely escalating. China's been running drills now for a while, like sending ships right by Taiwan. Definite escalation there.
China and Russia also had a pretty significant agreement, I would think, for the Russian oil, because Russia's economy is largely dependent on their big oil conglomerates. And since Europe and the US banned Russian exports of oil, I know China's been taking advantage of that with the low oil prices that Russia's been giving China. And I think it's interesting to see where that conflict will be headed in terms of the US. I think it'll be probably, if anything was to happen, US and Russia, or Russia and China would probably be together in terms of an agreement, and it would be the US would probably be on the other side of that equation.
Oh yeah, 100%. US not with them. It's gonna be, NATO and US versus China, Russia.
Yeah. But I don't do you expect the escalation of this like anytime soon? Like, is there any like catalyst?
I think we got another 5 to 7 years before anything really happens. I think it's
like China, Taiwan.
Yeah, it's a 2030 thing.
Yeah, I agree. I don't know. I feel like it's so hard to tell. There's so many factors that play into it, but I definitely think Taiwan or China's going for Taiwan sooner rather than later. Prime drafting age for us would be around when they start.
Yeah, I mean
unfortunately.
that is kind of unfortunate, but we're kind of in the midst of that situation. Uh, China, though, I feel like the U.S. has been taking action in terms of I know Taiwan Semiconductor is building a factory. I believe it was in Texas, but the U.S. is encouraging more factories to be built for particularly semiconductors in the U.S. And we know China has most of the textiles and all the cheap labor and everything. So uh if we can switch that to countries that we're more favorable with, that'll probably be a better situation for the US rather than keeping industry in China. Speaking of that, is there any Chinese companies anyone's looking at?
Uh, Honestly, no. I bought NIO at $2. It's that was the only Chinese company I looked at, only one I bought. I'm not really a fan of buying into Chinese companies. I feel like I'm much better at like analyzing American companies, especially with all like the questionable information that comes from China. I'm personally not a huge fan of that.
Yeah. Way back in the day, this was probably COVID time. I was looking at this small Chinese company called they changed the name to Happiness Biotech. They changed the name again. But I calculated out all the earnings stuff on their website, and it was really interesting because you were able to kind of like see everything, and like it's kind of fun to kind of look at a foreign company sometimes and kind of like make an analysis on it. But the Chinese sentiment or the U.S. sentiment towards Chinese companies for the past 2 years has really not been favorable. So we haven't seen like the performance in these stocks that maybe correlate to the earnings, whereas U.S. companies we have. Like there's kind of a tax for being a Chinese company versus a US company, I would say, in the US markets.
I think I've been looking at Tencent Holdings. I think they have shares in Epic Games and they have a bunch of shares in a whole bunch of things. I haven't really looked at their 10K yet. Um, but I probably want to invest considering the murky future of US China relations.
Yeah, 10 cent. I mean, are they? I don't know if they're probably listed on the. Are they listed on the? What exchange are they listed on?
I think they're I don't know. I think they're NASDAQ.
They might be. I don't know. They're Nasdaq.
I think so.
Yeah, they're either Nasdaq or over the counter. There was a company back in the day. I don't know if you remember, guys remember Luck and Coffee. It was like the competitor to Starbucks. And about 2021, they announced, or 2020, I want to say 2021, that they had fraudulent numbers, and it tanked down to $2 from $21. This is supposed to be the next Starbucks, but I think it's interesting because it never really recovered when it was listed on the U.S. markets, and then finally got delisted, went to the over-the-counter markets, and now it's trading almost back at that price that it was at its all-time high. So I mean, I think it's interesting like how like the US market treats these Chinese companies versus maybe the over-the-counter markets. And I just don't think the US markets right now are favorable to any type of Chinese company.
Yeah, I think when you're a retail trader, you don't have. I feel like over the counter is different for retail traders. Like it's a big risk to invest in a Chinese company, and I think it's a risk a lot of people don't want to take.
Yeah, it definitely is. There's a lot of different business practices, I would say, in China. But I think they did make a law. I forget they had some type of legislation that was demanding that they had an audit that the companies were audited in the US just to kind of disable that fraud. Yeah, it was a legislation proposed at some point,
I didn't know
just
that.
to kind of that's why a lot of time, like a lot of these Chinese companies tanked, like pretty significantly. The smaller ones, they all IPO, they go up like 400% or something, and then as they extend their lifetime, a lot of them end up going bankrupt. There's a really good documentary on it. I'll get back to you guys on the name of the documentary, but it's kind of showing like the coal. There was like a fake coal, like they set up they have completely fraudulent numbers. It's just completely different there than it is in the U.S. in terms of regulation.
Yeah, didn't someone go to check out the company he invested in, and they just weren't there? Like the company
Yeah,
didn't exist, or like didn't exist where they said they did.
it was one of the big short firms. So one of the big short firms they did that. Uh, I forget. It might have been it wasn't the Nikola short firm. Who am I thinking of? I don't think it was Hindenburg. It was the Citron, maybe. I think it might have been Citron Research that went and exposed the Chinese the fraud of some Chinese companies, and then they
Fraud.
reports goes down 90% a day or something like that.
Wow.
Pretty funny.
Yeah.
But that's the risk that you take when you're investing in Chinese companies versus US companies is lack of regulation.
Anything else?
No, that's all for me.
That's all for me as well.
All right, and with that, that concludes the first episode. The name is still subject to change. But yeah, thank you guys for being on.
Yeah, of course.